Welcome to WCS Money Tutorials. Today's topic is why are rich people getting $9.2 million in government handouts? What are government handouts exactly? Most people consider government handouts to be government payments to people who do not work, which cost the people that do work. So the people who do not work not only do not help support the government through the payment of taxes, but they also receive tax revenue in the form of government payments, increasing taxes for everyone else. However, as this video will demonstrate, most government handouts come not in the form of payments to people, but in the form of forfeited income that the government is entitled to collect, but, for one reason or another, decides not to collect it. The amount of income forfeited greatly exceeds the amount paid to people in the form of welfare, food stamps, and even Social Security and Medicare. Another big government handout is lower effective tax rates on investment and inherited income compared to earned income, the income earned from work. Thus, people who work subsidize people who receive much of their income from investments or inheritance. Many people complain about government handouts. Many people consider government handouts to be a form of socialism. Most of those people think most handouts go to the poor. Indeed, many people are enraged that their tax dollars are funding people who do not work. Some tax dollars do support people who do not work, but many of these people are unable to work because of poor health or because they cannot earn enough to pay someone to watch their children while they work, and for other reasons. But many people imagine that most of these recipients of government handouts are lazy and are unwilling to work. Indeed, political parties all over the world take advantage of this angst. In the United States, the Republican Party takes advantage of this outrage by continually trying to reduce government payments to the poor to fund big tax breaks to the wealthy. But it may surprise you that most government handouts, and the best government handouts, go to wealthier people, even the richest people. The Founding Fathers of the United States did give the federal government the power to assess taxes, since any government needs money to function. But the power to tax was severely limited by the U.S. Constitution, including the restriction to tax incomes according to the ability to pay. Although the federal government did assess an income tax before 1913, it was declared unconstitutional by the Supreme Court, which necessitated an amendment to the Constitution. The legal foundation for the federal income tax was set by the 16th Amendment to the United States Constitution, ratified in 1913, giving Congress the power to tax all income from whatever source derived. Preferential tax treatment results from different tax rates on different types of income, deductions, tax credits, and income exclusions. Lower tax rates obviously lower taxes since taxable income is multiplied by a lower rate of taxation. Tax deductions lower taxable income, which lowers taxes. Tax credits directly lower taxes by reducing the required payment. Excluded income, such as inheritance or the home sale exclusion, are not used to calculate taxable income, so they are not taxed at all. And because excluded income does not even have to be reported, it does not lower other tax benefits that would otherwise be lower or even eliminated if income is too high. Consider this hypothetical scenario. The government needs $1,200 annually to operate. It has three taxpayers receiving the same income: the worker, the investor, and the beneficiary. So if they each pay $400 in taxes, then the government would have its required revenue. If some taxpayers pay less, then other taxpayers must pay more if the government is going to collect the same amount of revenue. Note that this is always true regardless of what the revenue requirement is. If the government cuts expenses, it lowers its revenue requirements, but taxpayers paying higher tax rates will still have to pay more compared to the others if the others are paying lower tax rates. The government can borrow money, but this must be repaid eventually by collecting more taxes. This does nothing to make the tax system more equitable. Because politicians are elected, they must justify unfair tax policies. However, most of the arguments attempt to rationalize why taxes on the rich should be lower, even though they are already paying the lowest effective tax rates. Since investment income and gratuitous transfers, which are gifts or bequests, accrue mostly to the wealthy, these forms of income are usually taxed much less than earned income, the income earned from work. Everyone wants to pay less taxes, but the people who work have the best reasons for paying the lowest tax rates instead of paying the highest tax rates. One common argument used to justify taxing gratuitous transfers less is that it is double taxation, because the donor pays tax on it when he receives it, and then the beneficiary would pay tax on it when she receives the gift or bequest. However, this is not double taxation because two different taxpayers are paying income tax on the income they receive. This is why when you pay your house cleaner, they still have to pay tax on that income, even though you already paid tax on that money. The other problem with the double taxation argument is that workers usually pay 4 types of taxes on their income. But in this case, all of these taxes are being assessed on the same income to the same individual. Another form of multiple taxation is property taxes, which are taxes paid on the same property year after year. Politicians argue that lower taxes on investment income promotes investments. However, people will invest regardless of tax rates because it is the best way to make money without investing a lot of time. Money held as cash will lose value through inflation, and people will continue to invest in businesses because it is the best way to become wealthy. Because politicians want to give preferential tax treatment to the wealthy and to themselves, they never advance arguments as to why work should be taxed less, even though there are better and more reasons to tax work less than other forms of income. The most important reason for taxing work less is that people need that money to live. And why not promote work by taxing it the least instead of taxing it the most, as it is now? Lower tax rates on work will also reduce the need for government handouts, such as welfare and food stamps, the kind of government handouts most politicians complain about. Politicians argue that investment income should be taxed less to promote investments. Many so-called investments are not true investments. When you buy stock in the secondary stock market, you are merely buying from someone else who is liquidating their stock for cash. It is not money going to a business to invest in capital, which is what economists refer to as true investments. But even when money goes to a business and it is invested in capital, capital investment will make labor more productive, but production still requires labor. No new product or service will be created unless the business pays somebody to work to create that product or service. Only work creates true economic wealth. The biggest government handout is the Unified Tax Credit, equal to $4.6 million, which is now adjusted for inflation annually for each taxpayer in 2021. Each wealthy parent can take full advantage of the Unified Tax Credit of $4.6 million. So children with 2 parents can inherit $23.4 million tax-free, instead of paying $9.2 million in taxes that would otherwise be due without the Unified Tax Credit of each parent. Since the federal government is not collecting that $9.2 million, it must collect it from other people who are paying taxes, people who work, or people who receive low incomes like Social Security. And while it is true that less wealthy people can also take advantage of the Unified Tax Credit, there is still no reason why gratuitous transfers should be tax-free while work is taxed heavily. Where is the Unified Tax Credit for work? Because each succeeding generation gets this $9.2 million government handout, or whatever the Unified Tax Credit happens to be that year, rich families will benefit from tens of millions of dollars of government handouts in a lifetime, just in the form of the Unified Tax Credit, without even considering the many other government handouts that the wealthy receive. The primary reason given for the Unified Tax Credit is that estates with big farms or businesses may have to liquidate the business to pay the estate tax. But most estates do not have a big farm or business, and most that do have other investments that could be liquidated to pay the tax. There is also this thing called life insurance. Maybe you have heard of it, that people can buy to pay the estate tax. Also, The tax code already provides several ways of paying the estate tax, including making installment payments over a 14-year period. Regardless of what reasons politicians advance to justify allowing beneficiaries to receive their benefits tax-free, what justification is there for making people who work pay for it? Since the government forfeits the revenue by allowing tax-free benefits, other people must pay for the forfeited income, people who work. $9.2 million is a lot of money. That is $92,000 for 100 years. Most people don't earn anywhere close to $92,000 annually. According to the United States Census Bureau, the average 2019 per capita income in the United States was $34,103. That person would have to work for almost 270 years to earn $9.2 million, and much longer than that to earn that much in disposable income. Imagine if the United States government gave free education at the top schools, free medical and dental care, free child care, free Social Security, and Medicare. All of those benefits would cost a lot less than the $9.2 million of unified tax credits going to wealthy children. Even if you agree that children should receive their inheritance tax-free, you are still paying for it. Republicans want to give more tax breaks to the wealthy so they can be richer. Democrats want to give more benefits to the poor and the middle class so that they can live better. Benefits like a free education or free child care. Indeed, making college education free can help reduce structural unemployment, which results from labor not having the skills required by employers. Free child care would also allow many more parents to work. Hence, Democratic benefits also benefit the economy. Many Republicans argue that giving all these free benefits costs too much money, yet the combined cost of all these benefits is far less than the unified tax credit the Republicans gave to each taxpayer rich enough to use it all. Indeed, eliminating the unified tax credit could probably pay for these social benefits for everyone, because this credit allows an enormous amount of wealth to be transferred without taxation. So I'll tell you what, you can keep the democratic socialism. Give me the money that Republicans are giving to rich people. It's much more generous. The wealthy also receive many other tax benefits, too numerous to mention them all here. However, there are two benefits that are very generous. The home sale exclusion allows a couple married filing jointly to exclude up to $500,000 of capital gain from the sale of their home, and they can do this every 2 years. Some people may argue that homes would not increase in price that much in such a brief time. However, many wealthy people own expensive multi-million-dollar homes that can easily increase in value quickly, especially in hot urban markets, and they often own multiple properties in multiple locations. A married couple filing jointly can also receive more than $100,000 in long-term capital gains and qualified dividends without paying a single penny of federal income tax or employment tax. Such a couple would need to own about $5 million worth of stock to earn this much income in qualified dividends. Just exactly what kind of problem was Congress trying to solve by giving this huge handout to the wealthy? The wealthy also have many ways of combining tax benefits. Consider a married couple filing jointly who earn $100,000 in qualified dividends, but no income earned from work. They also sell their house for a $500,000 profit, and they receive a $10 billion inheritance. The $500,000 profit can be excluded by the home sale exclusion provision in the tax code. The $10 billion inheritance can also be excluded. Indeed, income received from inheritance does not even have to be reported, which is also true for the home sale exclusion. However, this couple will still receive their $100,000 of qualified dividends tax-free because the other income they received that year was excludable. One way to pay for government handouts to the wealthy is by taxing Social Security. This is how the tax on Social Security is calculated. You can pause the video if you want to examine the details. Just note the lower base amounts of $25,000 for most taxpayers and $32,000 for married couples filing jointly. These low base amounts were determined by Congress which are used to determine how much Social Security is taxable. And these base amounts are not even adjusted for inflation. Here are 3 examples of the convoluted calculations used to figure the taxes on Social Security. Senior citizens need Social Security to pay for living expenses, especially health care expenses. Many seniors cannot afford hearing aids, get their teeth fixed, or to pay for other health care expenses not covered by Medicare. Ask yourself a simple question. Does it seem right to give rich people a $9.2 million government handout and partly pay for it by taxing Social Security, or by taxing work more? Republicans continue to have the gall to call Social Security and Medicare entitlements, even though people have paid hefty taxes throughout their working lives to pay for these so-called entitlements. By contrast, the amount that the wealthy have paid for their unified tax credit is exactly 0, even though the unified tax credit is much greater than what anyone will ever collect in Social Security and Medicare benefits combined. So, if Social Security and Medicare are entitlements, then what is the unified tax credit? Republicans argue that wealthy people with big businesses need help in paying their taxes. Many workers need help paying their taxes. Where is the unified tax credit for work? Many politicians constantly gripe that the poor want government handouts, which many politicians see as a form of socialism. But if you look at the governments throughout the ages and across every society, it is the wealthy who have always benefited from socialism. While the wealthy in modern democracies can no longer take advantage of dictatorships or slavery or other naked forms of human exploitation, they helped create the tax code to favor them at the expense of everyone else. It is simply another form, a more subtle form, of human exploitation. The wealthy control the government, so they control it to their benefit, which has been true throughout the ages. Even in democracies, where most people should know better, it is clear that too many people are easily bamboozled, or they are obsessed with their hot-button issues. Only when enough people realize that they are the true slaves of modern society will they decide to vote in their true interests and demand lower taxes on work and other forms of low income, such as Social Security and unemployment compensation. Lower taxes on money that people need to live. Thank you very much for your time. If you liked my video, please subscribe. I would appreciate any suggestions, so please leave them in the comments below. Check out my website at thismatter.com for more than 850 in-depth fundamental tutorials on personal finance, investments, and economics. Check out my books on money at williamspalding.com. Thank you.